Ladies and gentlemen, boys and girls, welcome back to the channel and welcome back to the night before CPI is released. Yes, CPI will come out tomorrow around 8:30 in the morning Eastern Standard Time, and we're going to talk about the expectations for CPI, what could be bullish, what could be bearish, how the markets are potentially going to react. And this is going to be a realistic video because in all reality, stocks have been getting destroyed. The Dow has been doing a lot better, but even when you look at the S&P 500, you're still up from the lows of 2022 about 7.3%. So tomorrow could be a big green day or a big red day. And I know that's kind of, simple to say it's going to be a big green or a big red day, but you got to dive into it a little bit more. And that's what we're going to do here in this video. Also look at hedge fund positioning and a key data point that will come out on Friday as well. So guys, let's get straight into it. Hit that like button and subscribe to the channel if you guys have not already. Thank you for tuning in here on this cold, slightly winter night. Let's get straight into it. So today in the markets, S&P 500 down about 2%. A lot of people were talking about the CPI report that essentially we got last time, where the markets had dropped about 2%, leading into another very red day. And it was basically a snowball effect, the last CPI report, the last time that happened. And I do believe that was about right here. And it was just pretty much straight down into the lows of 2022. So a little bit of precursor, potentially what we're seeing today might mean a bad CPI report coming tomorrow. And why I actually say that in light of today's movement is because of the dollar and bonds. So to understand what's going on with investor sentiment and how investors are placing their capital, you have to understand how the dollar, you can track this watching the UUP, that's the ticker symbol. It's the dollar ETF essentially. You can track that by that or TLT, which is the 20-year treasury. And essentially, when the dollar goes up, that is bearish for markets. When TLT goes down, that is bearish for markets. And you guys can see the COVID crash reaction was right here. It went down. It's been going down for a while now, but 2022 really is where things started to take a turn for the worst, at least in the bond market, and the same thing with the dollar. Now, why this is important is because global investors, if you expected the United States of America, let's say you live in the UK where the British pound is devaluing like crazy, but you expected America to continue to raise rates for a while to decrease the money supply. Simple supply and demand here should make that currency more valuable, right? Countries that are not raising rates, like Japan, like China, their currencies are not strengthening. Now, a strengthening currency is not a bullish thing for that country, but it does mean the currency is getting stronger, and that is bad for foreign conversion rates. That's why you've heard a lot of companies on earnings calls talk about constant currency, meaning if the dollar was not going parabolic, then, XYZ would have been the growth rate year over year. Now, hopefully you guys have a little bit of prior knowledge on how this works, because you can make a whole 30-minute long video on just the dollar alone. But essentially, long story short, let's say you're Apple, you're doing 55% of your business overseas, you're taking in foreign currencies. Well, when the dollar is low, like during 2020 and 2021, when you take in those foreign currencies, they're stronger. So you convert it to a weaker dollar, it turns out to be more US dollars. When you're Apple and taking in these weak foreign currencies, converting it to a strong dollar, you're getting less dollars for the same amount of money. And that's why it's fundamentally bad when the dollar goes up. And that's why when the dollar goes up, it's essentially saying the markets are expecting more Fed tightening, more tightening for longer. And the dollar was up, including the move in after hours, over 1% today. So we have cooled down a little bit, but you're still heading back to the upside in an overall, bullish trend for the dollar, which is a negative thing for the stock market. Now, pretty much the same thing with TLT, a little bit of a different reaction here. Bonds going up just a little bit. And when this chart is going down, that means bond yields are going up. So when this chart is going up, when you have a green day, that means bond yields are slightly falling on the day. But that could also be a very worrisome sign if bond yields are starting to fall. It's a fine line between bond yields falling before a recession, because investors are getting nervous, and bond yields essentially falling because the Fed is not going to raise rates as aggressively. There's a fine line there. I think you're getting more of that recessionary type outlook here today. So I don't think it's a huge precursor of the CPI report, because if CPI comes in good, this thing is going to rocket straight up. The markets are instantly going to expect less Fed tightening, and that's going to be a very bullish thing. Now, if inflation comes in hotter than expected, TLT is going to drop, bond yields are going to shoot up, and the dollar will continue to rise as well. So that's going to be your worst case scenario. Now, as far as the actual expectations for the CPI report coming out tomorrow, yes, it does come out at 8:30 in the morning. You are expecting an 8% year-over-year inflation rate. The previous report was 8.2%. Forecast is for 8.1%. So if we're under 8%, it's going to be a very bullish rally. If it's over 8.1%, it's going to be very negative. Now, I think the markets are really going to care more about the month over month and the core inflation rate year over year as well, and core inflation rate month over month also. Now, the consensus for core inflation month over month is a gain of 0.5%. Previously, it was 0.6%. So we're expecting core inflation month over month to go down. The inflation rate month over month to slightly go up a little bit. The previous was 0.4%. We're expecting a 0.6% gain, and the core inflation rate year over year, we're expecting that to come in at 6.5%. The previous was 6.6%. And we've had a lot of people actually talking about how used car prices have started to come down, and potentially a little bit less pressure on the rent markets, which those are probably the two things that are leading to a little bit of a decline in the consensus view of this inflation report. So it's almost a negative thing when you're expecting CPI to go down and it does go down. Well, that's cool. It has to go down quite a bit more than likely to get a big bullish reaction. If you're expecting it to go down and it stays the same or goes up, that's a bad thing. And depending on what those numbers actually come out as, you're going to see a big move in one direction or the other. And when I say a big move, I expect tomorrow firmly to be a 3% plus move up or down, even considering today was over 2% on the NASDAQ, almost 2.5% on the Russell 2000. You could string together a couple bad days here, or we could turn this all around very, very shortly. As far as market expectations for Fed rate hikes, right now the markets are leaning more dovish for December. The Fed meeting December 14th, 2022, coming up here in just over a month. 66.3% of market participants are expecting a 50 basis point rate hike, so a step down from the 75 basis point rate hikes, whereas 33.7% of investors are still expecting a 75 basis point rate hike. And depending on what this CPI report tells us, we're going to get one more before December, but this one's going to really lock in the probability of a 50 or 75 basis point rate hike, at least in the market's eyes here. So if CPI is bad, well, you're going to get that 75 basis point rate hike start to get priced in. It could be pretty bloody for the markets. And the way CPI is, reacted with the markets this year, you've really only had one beat to the inflation report, and that was back here in August. And August was a very volatile but exciting time to be somebody that was buying the dip. Throughout the beginning parts of 2022, everyone thought they were so smart because the bottom was in June and you got the inflation report in August and everyone was happy about that. And then the following reports were just terrible. And obviously we went down, crushed those June lows, went way under that, and started to make our way back up. So I think there is a little bit more of a downside risk heading into the CPI report, just because of the simple fact people are expecting CPI to come down. If it does not come down at all, if it stays unchanged month over month and year over year, it's going to be a very negative thing. So be mindful of that one. If we take a look at the Ortex data and look at the positioning from hedge funds, this is something I like to do because a lot of the time hedge funds obviously have better data than us. They might know someone that's like, hey, some inside type information. So watching to see how they position can give you a, significant glimpse into potentially how CPI is going to come out. And if you look at this Friday, November 11th, 2022, on the call side, out of the total number of contracts on the expiration, 29.56% are calls, less than 30%. 70.44% are puts. So it is looking like hedge funds and big money are positioning for a pretty substantial downside move. A lot of these puts are pretty far out the money, only considering there's 2 trading days left until these options do expire. Now, on another little slightly, positive note, you did see about 6,500 orders today, worth about $818.54 million. Positive order value of 68%. And that's basically the story of tomorrow. Those are the inflation expectations, but after that as well, after CPI does come out, you're going to have continuing jobless claims 4-week average, and then at 10 a.m. Fed Harker speaks, Fed Logan speaks at 10:35 a.m., as well as Fed Mester that speaks at 1:30, and then finally Fed George that speaks at 2:30, and then Fed Williams that speaks at 7:35. So a lot of Fed speakers tomorrow after the CPI report does come out. And then on Friday, you have the Michigan Consumer Sentiment Survey for November. And depending on what this says about potentially wage price inflation, what expectations are for raises, for job security, for inflation, for basically everything, it will be important because expectations lead inflation. If business owners start to say, hey, well, people are going to ask for 5 or 10% raises every year, we're going to have to raise prices 7 to 10% just to cover that alone, because it's a capitalistic world, at least in America. We're not going to take that hit being a business owner. We're going to pass that cost on to consumers. That's going to mean more inflation for longer. Those higher expectations do go. So that's going to be very important on Friday as well, guys. So that is pretty much going to be all for this video. Last thing I do briefly want to mention is the short interest on the S&P 500 is relatively low, believe that or not. Considering we're still sitting at the lower levels of 2022, the short interest is only 16.5%, whereas at times in 2022, the short interest has reached almost 20% on the S&P 500 back in June. So I don't think you're quite to a market bottom, depending on what kind of stocks or positions you are in. Obviously, if you have puts, you might be quite happy with what is said here in this video, but keep in mind, nothing is guaranteed to happen in the stock market. What I personally expect is a big move up or down. I have puts to capture that downside move, potentially hedge out the portfolio, because most of the portfolio, a vast majority, is in long-term stocks. So that's a good way to do it, in my personal opinion, but anything can happen here in 2022, as you guys already do know. So that is going to be all for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Moomoo, and Public, link down below in that description as well, baby. Thank you for watching. That's it. That's all I got. Enjoy the rest of your night. I will see you in the next one.